What's up, everybody? It is your friend Ted back here again with your favorite Smart Money podcast. Yes, your favorite. I know it's your favorite because you guys like me. Um, anyways, we're going to be talking about Monero for a quick second. Um, Last time I went over it was probably about a week and a half ago. I didn't go anything over this past weekend. I was busy. Went to an awesome concert. Go Coheed and Cambria. If you're a fan, I love those guys. They're like the Star Wars of music. If you're a big nerd like me, but had a great time. Like you really care. But we're gonna talk about Monero, anyways. Um, and just like I thought would happen, it did happen. You remember I talked about phantom trend lines in my last one? Yeah, it definitely went through those. So we'll get to that in just 1 second. First, I'm going to show you this cheesy opening. All right, so that was the cheesy opening. All right, so again, Monero, this is my primary moneymaker just because I watch it all the time, and it has a pretty predictable, I don't know, way of what's going on. And like I said in my last video with the phantom trend lines, it definitely did what I thought it was going to do. Anyways, the Smart Money podcast, if you don't know what smart money is, it is basically going against everything you've ever been taught. If you've been taught how to trade on trend lines, trade on bear, bull flags, trade on harmonics, trade on Elliott wave, trade all that stuff that's been like textbook, whatever, all that. I mean, you can read all that stuff. That's fine. But what you're gonna learn, especially in the long run, is all that is a big distraction. And it's there. All that stuff was kind of made up by big bankers, so that way they can teach you how to trade like that. That way, when you do trade like that, they know how to trade against you, right? So when I trade futures in the crypto world, I know exactly how they're thinking and what they're going to do, and so I know how to trade against them. And so far, it's proven very effective. I took a year-long mentorship with Inner Circle Trader, which was primarily in the forex market, the foreign exchange market, like trading euros for dollars or pounds for euros or yen for Canadian dollars or whatever. But I transferred all those principles over to crypto, and it has been it's like the exact same. So I'll go ahead and dive into it soon. But first, if you this is the kind of stuff that you want to get into, break out of the stuff that you've been taught, go ahead and do me a huge favor. Just hit that like button. It does me a huge ton of good. It doesn't take you but 5 seconds to do it, and it helps expose other people to this kind of content because they may need it. You never know who needs it. Also, the next thing I'd like to ask you to do, if you know somebody that's wanting to learn something new, share this video with them. And I don't mean just share it. I mean share it. Share it. Just go ahead and share it. That's what I mean. Next thing I'd like you to do is hit that subscribe button because I'll be making more videos. Again, I usually try to make at least one or two a week. I would like to make more than that, but my work, man, I work a lot, and right now we're getting paid double time to work overtime. So I can't refuse to work overtime, and I work about 11 hours a day. So by the time I hit my fifth day, like today, I'm already in overtime. So, anyways, let's go ahead and go over to this chart, shall we? Wrong one. There we go. Okay, there it is. All right, so this is Monero, as you can see up in the top left-hand corner. I am on the KuCoin chart because that is where I trade my futures. I trade my futures on KuCoin and Konex. Those are the two places I trade my futures. Okay, so it's just easier for me to trade futures there. They make it easy anyway. The central exchange does. So, anyways, last time we had talked about Monero. I believe. Let me see here. I think I'm on the 1 hour. Let me go back to the 4 hour. Of course, I have the weeks marked with the yellow dotted lines. And I think I talked about this before, right? I talked about how there were two connecting lines right here. And you know what? Let me turn on the red dot. I don't think I have the pointer turned on. Or do I have the pointer turned on? I think I do. I think I need to move. Oops, wrong thing. Sorry, I was looking at backpacks earlier. Um, there we go. I think I need to move it over here. And then maybe the pointer will show up. Oh, would you stop? All right, is the pointer showing up? I don't know. Hold on. Let me hit properties, Windows. Sorry, I did not think about adding the pointer until just now. Just because it's easier to see. Um, but the pointer is not coming up. Why is the pointer not coming up? Anyways, the pointer is not coming up. I do not know why, but it is not going up. So, unfortunately, there won't be a red circle around where I'm going. I'll probably just have to add, like, I don't know. But I'll add something. But as you can see, um, down here was the first. Well, if it would actually move the way I wanted it to. This was the first area that I was talking about to where it started a trend line, that little circle there. All right. And then it ran into this one, right? So those 2 points were the trend line I was talking about. And I said, what's going to happen is that it's probably going to consolidate and then go back and go against this trend line. Everybody's taught to trade off the trend line, right? That's what you're taught to do. Well, if you extend that trend line out, as you can see, it went directly through it because there was a lot of people probably trying to trade right here as soon as that trend line, because you can see as it's getting closer, what did it do? It moved up. So this is smart money going, okay, we're gonna fake people out by letting them think that that trend line is there and that they're gonna stay along that trend line. And instead, what does it do? Boom, goes up right down through the trend line. And what is it? It hits, well, I guess you could say the fair value gap, but the fair value gap had already been filled. So that would not be a reason as to why it stopped where it did. Why it stopped where it did would have to do with more than likely a bullish order block, because you can see generally when it comes to uh, the market maker buy sell model, and I've shown this to you before. I'm going to type it in, market maker buy sell model. That there's going to be certain sections, right? Certain sections that are blocked up, right? And those certain sections basically show you where the price likes to kind of hang out and then move over to a new area. So whenever you look up this, you'll see examples. Kind of like this one. This guy kind of had he's basically has an idea of where it's going because of this is basically right here. the prime example of the this is the buy model, right? Because it sells first and then buys and ends up above where it was before. This is the sell model, right? So it ends up going up and then going down below to where it sells. So it makes money by it, not just by selling and going down a little bit. It makes money by free by faking people out, by thinking it's going to go up, and everybody gets stuck up here, and then the smart money, the people that have the ability to control these charts, sell at a certain point and they make more money this way. All right, so that's the general premises of the maker model, or the market maker buy sell model. So that's what's kind of happening here. So there's kind of, I wouldn't say a box, but yeah, there's kind of like an area right in here to where the price kind of stays, right? So that would be like your consolidation phase, right? And then it moves up. And then after it moves up, these two boxes right here are fair value gaps. So, which means that price is going to end up filling up those gaps. So, as in this one, it did, and it came up. Let me move all this stuff out of the way. It came up, hit a top around 171, right? Fell back down, and then it hit, where the 4 hour gap was previously. That has already been filled. That doesn't really matter. Um, what does matter is what was previously over here too, was that there was a 1 hour fair value gap with no balance, right? And it does end up filling that on the way back up, and then it comes back down into it. But then again, I think the most major thing, let me get some rid of these Fibonacci's because we'll get back into those later. I think the primary reason why it came back down into this area was because of the phantom trend line. Why? Because everybody was thinking it was going to buy around this area. It did not, right? That was the whole premise of the phantom trend line, was to make you think that it was going to be going off that trend line instead of go straight through it. And then when it comes back up, everybody has this idea, or you've been taught, that once it gets on the opposite side of the trend line, it's going to sell at that trend line. Well, what does it do? It goes right back up through it. So there's two areas there to where smart money has taken you, one, for your money by not buying to where it should have been, where it quote unquote should have been, right? Uh, and then going through, staying down, and then it comes up and it gives you this fake out a couple times, right? So it gives you these wicks to make you think that it's going to stay below this trend line, and you can see the body staying below it. And then all of a sudden, boom, jumps right above it. Again, taking you right back out of your money because everybody's seeing these wicks going, oh yeah, it's going to stay below this now, so I might as well put in my sell here. And that's what it did on this 4 hour on the 9th, is it started selling, and everybody's like, oh yeah, I'm making money, I'm making money. And then it switches over, and then boom, jumps right up. Anybody that had a short right there got taken out. Their money got taken from them, and that money transferred directly to those that were either in a position that knew what smart money was doing, such as myself, or smart money themselves. So that would be your large institutions that have, control over these kind of things. So it jumps up here, right? And as you can see, we have almost a four, almost four equal highs, basically. So you have, if I were to draw a straight line all the way across, you have 1, 2, 3, and almost 4. A lot of people would consider this resistance. This is not resistance. This is what's called, well, I shouldn't put liquidity. I should put manufactured. Why is it manufactured? All right. Manufactured means that it's been artificially created. So smart money knows that whenever there is a resistance line, what are you going to do? You're going to sell at that resistance line, right? So they make a couple points or a couple, you know, almost equal areas to where you think it's going to sell again. So the next time it comes up here, what is more than likely going to happen is that it probably will come up here, get near this line, probably pull back just a little bit, maybe even a little bit further, and then jump right up through it. That's what almost always happens. And the reason why it would pull back this far, and it could pull back this far, is because you have to look at the last breaker, right? I talked about breakers before. I'm going to get rid of these boxes right now, right? Because these are the fair value gaps. This big gap right here in between. Here, I'll show you where the gaps are. So here is a 4-hour fair value gap, right? That's already been filled. That means that there is a huge gap in between this wick and this wick, right? So in between those two wicks is a fair value gap, right? So what would happen is you can see the body stayed below this, and then all of a sudden, boom, when it came to the trend line, it ran right through it. Came up to the top, stays right at that area to where that 4-hour fair value gap is, drops again, goes into it, and then comes back up. So it's done it like twice now. Now, if we get into the 1 hour, you can see exactly what it has done. So it comes up, fills it, stays in consolidation, pulls back, goes back into the same area, but it doesn't stay there long, and then runs back up, pulls back. Look, it almost hits that exact same marker of that 4-hour fair value gap to make sure that is completely full, and now it is on its way back up. All right, so what's going to happen next? That's the question I'm sure everybody's asking. So you're going, okay, well now you said all this. This is all hindsight. So what do you think's going to happen next? Well, what's going to happen next is you have these 1, 2, 3 points of manufactured liquidity, right? So price would pull up to this same point, right? And everybody would start selling or shorting at this point. Now, why would it fall all the way back here? Again, you would have to know where the breaker is. Now, the breaker is your last up movement before it drops below and closes. So that's where these 2 green candles come in. These 2 green candles right here is your breaker. Why? Because you have a low. Oops, why is it doing that? Low. All right, I'm going to copy, paste. Hi. Not Hugh. Hugh's a guy, no. He's a really good guy. Um, Actually, I really don't know Hugh. I wish I knew a Hugh. That'd be kind of cool. Lower low. All right. So you have a high, low, lower low moment. So what that is considered is that is a breaker technically, right? And when it comes up to a breaker, that acts as resistance. So that's why it comes up, hits this breaker, falls back down. And look, as you can see, it is right underneath that breaker again. Now, my prediction, I guess you could say, is that it's going to run right through it because it's already pushed itself up. It's already broken some highs over here, but this thing is going to go up, get near this equal high, pull back down into the breaker, right? Because now that it's above it, whenever it gets above the breaker, now instead of acting as resistance, it acts as support, right? This has nothing to do with supply and demand. This has nothing to do with anything that Crypto says or anything that all those people say, whatever. I sometimes I can't stand some of the TA people on Twitter because they really have no effing idea what they're talking about. Not saying I do all the time. I'm not trying to say that at all. But I'm saying that I have done this enough. I've seen this enough. I know about 99% of the time what is going to happen. All right, so it's going to come up, probably hit this, pull back down into the breaker area. Now it could hit halfway through. It could get all the way down to the bottom. If it gets to the bottom, it could spike through, right? But the body should stay within this area right here of the breaker. And now I drew the bodies, right? I didn't go from wick to wick. I went with the bodies. Why? Because that's where the most of the volume is. You want to go to where most of the volume is. So it's going to come up, hit this. Everybody's going to sell. It's going to fake people out, come down, hit the body of this, and then run right back up and break this liquidity. Why would it break this liquidity? Because everybody else is thinking it's going to sell in this area. So therefore, most people would have this type of position on this chart, right? They're thinking, okay, look at all these equal highs. There's no way it's gonna, break this and get any higher. It's gonna short again. No, that's not how it works. That's the exact opposite of how it works. You have to wait for it. You have to wait for it to give you signs of what it's going to do, right? And it's given us a pretty good sign as to what it's going to do. Gave us some manufactured liquidity. It gave us a breaker, right? So now we got to wait for it to jump up above the breaker. We have to wait for it to hit the manufactured liquidity line, see if it's going to pull back. And I would put, to be honest, what I would do is I would put 3 limits in here. I would put a small limit. I would put a limit here at the top of the breaker. I would put a bigger limit about halfway through. And then I would put probably the largest limit near the bottom, right? And then maybe even a huge limit with as much, leverage as I could below it. And I would put that right at the last red candle that goes down. Why? Because that is going to be your bullish order block, right? And your bullish order block is going to be where your last down candle comes, right? That is where your smart money wants to push the chart down to get dumb money, I should say, to follow it. And that way everybody else sells off with it. And then once it gets to a certain point, they buy. Why? Because they make more money by selling off their assets, shorting it. That way they hedge against their bet. They get more people to sell off with them, and then they buy at a cheaper price, right? So if we were to put a Fibonacci on this, right, this is what it would look. Well, actually, what I want to do is I would rather do something like this. Let me see if I want to go back over this way. Because I want to see how the Fibonacci has come and gone throughout this. Because if we look at this, okay, so this came back and hit the 50. If we were to look at this, actually, hold on. Let's go back a little bit further. let's go back before. Let's go back to that second point to where I said, it would start that trend line. Okay. So it pulls up. It doesn't come back all the way back down to the 61.8. The reason it doesn't come back down to the 61.8 like it normally would to get a cheaper price for the smart money is because it has already broken structure, right? You see this high here? If you see this high here, that right there, I'm going to change the color on it just a little bit brighter so you can see it. That yellow line right there, that dotted line, that is a break of structure. So that tells me that it is a very bullish chart, right? So now that we know it's a very bullish chart, well, what's going to happen next? Well, more bullish action is going to happen. So it does pull back to about right here, just underneath where it was uh, to to where the break of structure was. But that break of structure was also in one of those boxes that I mentioned of the market maker buy sell model. So therefore it doesn't stay in there long. Why? Because it's already consolidated in that area. So it's not going to stay there long. Instead it jumps out, it consolidates in another area, and then boom, jumps back up. Now, if we leave the Fibonacci as to where it is, where does it go up to? Almost the 150, past the 127, right? Okay, so, but then if we were to move this up here, this Fibonacci, where does it pull back down into? Boom. Back down into the smart money buy area. The smart money buy area is a 61.8% to the 88.6%. And as you can see, it doesn't stay in there long. Why? Because smart money has taken their time to load up on that price. That way they know they got the better deal out of everybody else. And they probably loaded up over here too as it was consolidating because they knew this was going to happen, right? This is how they read the market. This is how they read price action. So now, as it comes up and it does this, and boom, it takes off above this manufactured liquidity line. It's probably, and as you can see, I have, this is probably either a weekly or a daily um, fair value gap. A fair value gap is a point in the market to where there is an imbalance, right? Um, that's what this is as well. This red outlined area, right? I think that I want to say that's a monthly. I'm not 100% sure. I'd have to go back and check, but either way, that is an area to where the market has an imbalance. And it also made an imbalance on the way back down. So what does it have to do? It has to fill that imbalance on the way up. And look where it lands. It landed exactly the 150%, the 1.5x of the current Fibonacci level, right? So it dips down into, oops, wrong thing. It dips down into the price that would give the the most discount for smart money buyers or good retail traders that know smart money. And then you buy it up here, right? And then you wait for it. You wait for it to come up here. If you want to short it there, you can. Again, this is not financial advice. This is just me talking from experience doing this. I've done this so much, it's not even funny. I grew a $200 account into about a $2,000 account in a couple weeks just trading XMR, Ethereum, and Bitcoin in futures just by doing this. Because all it takes is, $20. You can put 8x on it, 10x, 15x on it. And as long as you know what you're doing, you can take that, 5, 10, 20 cents or whatever that you bet on which direction it's going to go, and you can turn that into 20, 30, $40 easy, as long as you also know when to get out. That's the next thing. All right, so the next thing is to when to get out. I would guess we're somewhere around 182, right? So I mean, you can go ahead and bet now. Throw in, and actually that's not a bad idea considering it's below where it could be, or it's below the breaker. Now, what could happen is that it could hit this breaker and actually break lower, right? So if it did that, now we are looking at a little bit of a different scenario. Not much of one. But as you can see, if I moved this here and then this here for this wave, again, it dips down. And where does it hit? The last one, I think it hit right around the 61%. This one nails the 88.6%. This is the reason why I have these. Oh, you can't see it. Hold on. I don't know why you can't see that. Hold on, let me see if I can push this over a little bit. There we go. Okay. So, as you can see over here on your right side of your screen, you can see where I have 50%, right? That's the white line. The yellow line is 61.8, green line is 70.5. I have a teal line, bluish line that's 79%, and then a purple line that's 88.6. These are the smart money areas to where price likes to return to give smart money their better deal, their area to where they want to buy to load up before they move on to the next phase of what's happening in the chart. Because if you haven't noticed, things have been moving up, which is good. It's really good. Uh, so like I said, what could happen is that this could reject here, right? And it could pull back a little bit. If it did pull back, where would it pull back to? It would pull back to a bullish order block, which would be your last down. It would probably be right around in here, right? So right around this area, that area is somewhere around 160. Okay. Um, why do I think it could pull back to there before it moved on anywhere else? No, well, primarily because, well, look, it went from green to red already, so I'm not for sure if it's going to do that. But because that is where the bullish order block is, that is where your last down candle uh, is before your next bullish candle comes up and closes above it, right? So, therefore, it comes up, it fills in this breaker. The breaker rejects it, right? Now it's coming back up into the breaker. But as you can see, there's also some equal lows here. I don't know if you can see that or not. Let me see if I can get rid of this red line here really quick. So whenever you see some equal lows like this, there is a possibility that people see that and they think that that is support. More than likely, it is not. Anytime you see something that looks like support, that is usually a fake out, right? There's usually almost 100% a fake out. That's letting you know, hey, it looks like it's going to come back to this area, But more than likely, it's not. So people usually will put something like this, and they'll go with a short stop loss because they don't want to lose too much money, and then they'll, I don't know, they'll aim for the stars, right? And then usually what happens, if they did that, they might be in the clear. But what generally can happen also is that if you take the last down candle, what can happen is that if you measure that in half, so I just threw a Fibonacci on it just to get the 50% mark. Here's 50% mark right here. Okay, get rid of the Fibonacci really quick, just to get rid of the measurement. This thing could pull all the way back down into here, just because that is a typical price action of smart money. It'll find that bullish order block, and if it's a very, very strong, very, 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 very strong bullish chart, whenever it hits the start of the bullish order block, which would be the top of here, which is somewhere around like 160, like what I said, it'll bounce right off of it and then keep going. But most of the time it's not. Most of the time it's kind of wishy-washy and it doesn't know what it wants to do. So it'll pull halfway down into the bullish order block. And that halfway point, let me see what those coordinates are. Somewhere around well, the last one was 160. Hold on. I don't think I clicked on the right thing. 159.20, 159.21. So less than $1 away. Yeah, so less than $1 away. Actually, I feel like it should be more than that. Sitting down here is 157. $1.50 away, I guess. Yeah, so it's about the bottom of about $1.50. And up here is about $1.60.50. So it could be anywhere, or 160.50 to about 159.20, somewhere around in there. I would think somewhere in here is where it could go before it takes off and starts buying again. That is scenario number one. All right. I am not sure how likely that scenario is going to last or if it will. I am more looking at this running right through this this breaker, right? So what I am thinking is that this thing is going to run right through this breaker. It'll probably break these highs that it has before, right? Pull back just a little bit and then hit the breaker again. Now, here's another thing is that I already did this low high, lower low scenario. If you haven't noticed, there's also a low high, lower low scenario to where that low is, right? So what could happen is it could pull back, and this is what I think may be more likely to happen, is to hit the top of this. Why would it hit the top of that and not pull all the way back? Well, if it pulls all the way back, it gives people more time and more I don't know what the wording is. More timing to try to make money off of that pullback. So smart money usually doesn't like to do that. They don't like to give people money. So instead, what they'll do is they will take this, make sure it's the body. It may not even be the body. It could be the wick. So, hey, bodies and wicks. That's why I call this channel what I call it. Got something new from me today. Or hey, Fonzie. And what it was doing down here, it could pull up into here, probably hit maybe halfway through, That's what all another thing it likes to do. It likes to hit about halfway through these imbalances or these breakers, pull back just a little bit just to make them think that they're doing something different, and then boom, rise up, pull back, hit the top of this, and then break that liquidity line, right? So if I did this, break that liquidity line. Why? Because again, you're going to have people not longing, but trying to short this area. And if they did that, boom, they'd be out, and people will set their limits and walk away and think they're right. And next thing you know, they look at their phone when 45 an hour, minute, a couple hours later, and they're like, "Oh crap, I just lost a couple $100." Because they don't picture these things, they don't notice these things, they don't study these things. So I ask you to share, like, do as much as you can. And if I'm wrong, I'll admit I'm wrong, and I'll go back and I'll say, "Hey, this is where I was wrong. I've done it before in a lot of videos." But this to me, it looks like a solid case of, I mean, when you got this kind of highs right here, that's just stand straight up manufactured liquidity. And then your next, oops, that actually moved a little bit too much on me. Your next move, right, is going to be somewhere up in here, in between the 150 and the 162. Why? Golden ratio also 1.5x, and it's also in between some fair value gaps. So that's where I think it's heading to. Anyways, that's all I got for you guys today. I'll be uploading this soon. Thank you for watching. And, well, I guess I should say, always remember to, what was I going to say? Oh, yeah, wear your pants.